He is a veteran. Wow, I didn't know we were going to have hecklers, but veteran real estate investor with an owner's eye for detail and 20 years of experience in the rental
See that
industry.
gray in that beard? It's 20.
Yeah, it's 20. It doubles in like dog years, right? He's father of two. Favorite bedtime story is King of the Dinosaurs. The T-Rex.
Rex, yeah.
Every night. When he isn't managing portfolios, he's building long-term wealth for his clients. Let's hear it for Mr. Shepard.
Thank you. And I'll shout out Adam and Lawyers Title. Like, we got connected with them, I don't know, 7 or 8 years ago, and our Catherine Runyon has been absolutely phenomenal for us. Like, whether it's closing one of our syndication deals where we have 25 different investors, they do a fantastic job. So
Appreciate it.
Thank you. Yeah. Okay. Market update. I'm Chris. We're going to take a look at residential sales. We're going to chat about the real estate cycle. We're going to walk through some RMLS data I pulled from 1998. I'm excited to chat about that. Some things that are driving multifamily, and then a couple takeaways. So, let's take a look at our counties right now. This is average price. And 2021 to 2025, we are the same in Multnomah County, but sales volume is down about 40%. Washington County, we're up 4%. Sales volume also down 40%. Clackamas is up almost 10%, and sales volume is not down as much. So Clackamas is doing a lot better than Multnomah and Washington. And then Clark County is blowing up. Sales volume is, I think, only down like 25% there, but average price is up 20%. So Vancouver is killing it, and there's a couple things that are driving that. Local taxes may be one of them. Some migration. Vancouver's a big winner. Okay, so before we dive into the RMLS data, I wanted to chat about the real estate cycle. We thought this was an easy image. So we've got recovery, expansion, hypersupply, and recession. Like right now, I would say that we're probably tail end of recession or in that contraction period. Hopefully, maybe we're, who knows? Ask Mike Nuss. But does anybody have any events since 1998 that may have caused a disruption or something that impacted the real estate cycle?
.com boom.
.com. I'm excited to chat about .com. What else? What do we got?
2008.
Subprime mortgages.
Windows XP.
Right. Yes. Internet boom. Yes. We've got the Great Recession in there. Some credit bubble.
Shutdowns, lockdowns. It's got to be something.
COVID is in there. There may have been some Portland riots. We're just chatting the Portland RMLS data. So that's what I got for you. What else?
Do you have a certain president?
I don't know if that's going to show up in the data. Do we think that that's going to show up in the data?
It showed up in the lending data when Trump got elected for sure. Back in 2016.
Yeah.
It made rates go up 1% overnight. I did not like it.
Interesting. Okay.
It was
All right. All right. So through RMLS sales activity, I am going to show 3 real estate cycles. So starting in 1998, this is kind of internet boom. We're peaking, and this is the first data on RMLS, and there's 28,000 sales residentially in Portland Metro, including Vancouver. 1999, we've got 29,000 sales, and so we're kind of getting to late peak, and then we've got our .com bubble, and sales drop to 21,000, and that's roughly a 30% drop. 2001 to 2004, honestly, the sales are significantly higher. I think that RMLS is capturing more sales, as like the internet improves, and Zillow. When did Zillow come out? Like 2006. It's before Zillow, but essentially average sales from 2001 to 2004, 32,000 sales a year, and essentially this shows pretty much a full real estate cycle from peak to peak, 1998 to 2005. That is, 7-8 years. And 2005 is actually the peak of real estate sales in the Portland Metro in the past 30 years. 42,000 sales. And so 2005 happens, it's just a big run up. I mean, interest rates, I think were, 5.5%, 6%. I remember looking for a house in 2005 down in Tucson, Arizona, when I was going to University of Arizona, and I literally could not find anything. I finally found a place in late 2006. I paid way too much for it, and then 2007 happened. And
Do you still have it?
I 1031'd it into a fourplex. I 1031'd it into a fourplex in 2018. So I held that for 12 years, and I made $20,000 on it. So
gotta protect that depreciation.
that first deal. So 2005 happened. That's a big expansion. 2006, more late expansion, and then 2007. So it was kind of like the last half of 2007 and all of 2008, 2009, 2010, 2011.
2007. That's when American Home Mortgage went bankrupt and the stock market stopped and the fucking cards tumbled.
This is true, but it was second half of 2007.
And I was only 2 years older than that.
So
wait, how old were you when XP Windows came out?
Yeah, like around.
Not born?
I was still in Vietnam when I was. Yeah.
Welcome.
Yeah, and so that contraction lasted 4.5 years. So that is something to note. 2012 sales increased 20%, and that was the beginning of the recovery. And then we move on to the next real estate cycle, which is 2015 to 2025, and this was fueled by low rates. The run-up period of 2013, all the way to the peak of, say May of 2022, just like an incredibly long run-up. I mean, if you look at that last real estate cycle, or the last two, you've got 1998 to 2005, and then 2005 to 2012, like those are full real estate cycles. This expansion period was longer than both of those. So that's something to take in and understand. Sales during the recovery for 2013 to 2015, 37,000, and just gradually kept growing through COVID was a weird year. Sales were down, I think, 40% during COVID, but 2021 they peaked at 41,000, and then 2022 half of it was good, half of it was bad. 23 to 25 sales have dropped 40%, and that's where we sit right now. Sales activity is extremely low. A lot of homeowners, property owners are hanging on to their low interest rate mortgages, and we're just wondering how long this contraction period is going to be. So that is a little history lesson. I've got some more stats and data if anybody has questions later about the real estate cycles. Moving on to multifamily, we've got some driving factors. Interest rates is a big one. Interest rates are significantly higher than they were in December of 2021. So cap rates have expanded, and then we have supply. There is a significant amount of supply that has been delivered to the Portland Metro, and that's part of the peak phase that we went through in 2021 and 2022 is oversupply, and as we're contracting, supply continues to get delivered, and so that's a big struggle. Finally, though, I think that permits are significantly down. Deliveries have come down 50%, and I've got a slide on that. Rent and expense growth. So rent has not grown that much due to supply, and expenses have grown quite a bit due to inflation. And so then we've got local taxes and migration. If you guys saw my counties page, there has been a little bit of migration from Multnomah County to Clackamas and Washington and Vancouver, Washington. And so that hurts the city of Portland market. City of Portland actually has around 180,000 multifamily units, whereas Vancouver only has about 20,000, and Clackamas and Washington County have significantly less. More are being built, but Multnomah County has the most. And then we've got local taxes, and then as well we have just kind of local business politics and and layoffs with our major employers. So those are some headwinds that we're looking at. And so looking at last quarter, our vacancy in the Portland Metro is the highest that it's been. I just threw 2010 on there because I didn't know what the number was, but this might be the highest vacancy. Like, certainly since I've been investing in Portland, this is the highest vacancy I've ever seen. So execution and operation are of utmost importance if you're going to be able to succeed in the market. With flat rent growth, eventually there is that pendulum swinging of tenants going to the suburbs, but eventually it'll swing back. Like, people are going to come back to Portland. They're, the city's promoting office conversions, the office to multifamily conversions. People are going to come back. The question is when. Sales volume will remain low. Question is, that's a Mike Mayer question. What's the crystal ball say about the interest rates? And then there's been some pretty serious.
Keep them alive, Mikey.
There's been some pretty serious damage when it comes to peak to trough. I mean, if you look at some of the towers downtown, some of the larger properties, there's been, significant price cuts. I think, Big Pink.
Forget that. Some dudes in Hood River bought an 80,000 square foot building for $550,000 on Southwest First.
Yeah, it's crazy.
That's insane.
Some multifamily properties are trading 25% under what they were purchased for, during that recovery period. Residential, if you're looking at Multnomah County, last year there were properties trading 13% lower than what they were purchased for the people who had to sell. And so the one thing that is, kind of a tailwind is we finally have some relief when it comes to the supply. 8,000 units were delivered in 2024. It's down to 4,000, or 2025 was down to 4,000, and then there's only 2,300 under construction currently. And so under construction does not mean that it will be delivered this year, and those under construction units just mean that there's permits, and so some of those units may never happen. Multnomah County has less than 400 units under construction, and the question, will those units even be delivered? Who knows? And
That is not a big number.
no, it's not.
Thank fucking God.
Yeah. So
Sorry.
vacancy is high. Some people, CoStar, think that vacancy has peaked. Multifamily Northwest, it's sales volume's down, and rent growth is not great.
These are actually good things for inflation and mortgage rates.
If you're not an owner and excited, you're fucking wrong.
And excited, not just
Right?
excited.
And so here's my 2026, headwinds and tailwinds. Let's talk headwinds first. So we've got employment and income and jobs. The job environment, it's not looking great here in Portland. We need some help from local government, state. The Moda Center might get remodeled, so that could be interesting. Some money coming in there. Vacancy is tough. There's a lot of supply. Even when it comes to affordable housing, there's 10% vacancy with affordable housing units. So these are brand new units that are being rented for seriously under market rent, and they're vacant. They need to be absorbed, they're offering concessions too. Sometimes 3 or 4 months, and so when you have a tenant who's living in one of your units and they see, 3 months of concessions, like we're as a property management company, we're facing. A lot of turnovers. I'm sure that.
Because they're jumping to go to the next concession. They're just saying we're going to jump to go.
Yeah, well, if you only have to pay 9 months rent every year, and then rent growth. Like the supply needs to get cleared up for rent growth to occur. So I think that we've got a decent amount of supply to chew through, and transaction activity. It's tough to make a deal happen. Even though it is probably the absolute best time to buy a property, there's just not that many for sale, and it's tough to get the right deal. But if you're able to transact at what is considered a reasonable rate right now, you're going to be looking like a genius here in 5 years. So that's my opinion. Now for our tailwinds, we just landed number 1 on net migration for United Van Lines. I remember looking at this report in 2013, 14, 15. We were number 1 for, or number 2 for multiple years on net migration. One of my buddies who owns a moving company is like, yeah, but when it comes to volume, there's just not that many people, but at least that means that the people who are here aren't moving away. So helps with absorption. And then, supply. Finally, after 2 years of pretty record deliveries, the permit cliff is real, and there should not be that many deliveries this year. So my takeaway is, since 2022, like June of 2022, when interest rates peaked, we've been in contraction, and so we're coming up in June of 26. That's going to be 4 years of contraction. If you look at the Great Recession, that's 4.5 years of contraction. How long will this cycle of contraction be? We have to be at least halfway through it.
At least halfway.
At least, well, that's like I can guarantee we're halfway through it, but we could be at the very beginning of recovery, and honestly, the second half of contraction is the best time to buy property. And so that time is now. And so anybody who wants to get into real estate, this is absolutely the best time to do it. So, yeah.
Fucking go.
Any questions? Like, I've got some data slides.
Chris, do you expect with the SDC waivers, do you expect deliveries to increase due to that, or no?
I mean,
Chris says that's not going to do fuck all. That's what your face just
some of the
Can you explain that
so
for people that don't know what that what
so yeah so City of Portland says that they're going to they are waiving all of the system development charges, which are significant per unit. Sometimes it's between $40,000 and $70,000 per unit on construction costs. Construction costs are already like really, really expensive. I have seen 2 projects that did not go, literally one right down the street here, and then one next to my old house, right next to Gabriel Park, and very, expensive projects, where the system development charges would have been very expensive. Those projects went. They're like cottage style properties, and I think that we're going to see some more cottage stuff. But I don't think that large projects are going to go just because of how expensive it is to build.
And they would have already had to have it in the pipeline for them to be like rolling out quickly. So we may see it start to trickle in soon.
Yeah.
Later.
Yep.
What's the time frame for when they're waiving those SDC charges? Did you say?
I think it's indefinitely. I think they said there's a goal of 5,000 units, and I feel like under 1,000 have kind of taken them up on the offer.
Yes, 3 years. They were going to cap it at 5,000, but they took the cap off. So they took the cap off to make it a 3-year program, and then they'll do check-ins, and based on progress, they may extend it or they may not.
Yeah. Well, it'll be interesting to see if they meet their 5,000 number.
They're going to get a lot closer to it than not.
Okay. Well, cool. Any other questions?
Insightful. I appreciated that, man. Nice work.
Cheers.
Thank you.